So we finally hit the expected move of this inverted head and shoulder pattern over here. I cashed out of my position on Friday for an awesome win. So now what's next? Let's go over a bull scenario and let's go over a bear scenario so that you can be better prepared for trading this week. What a move it's been in the markets over the last week. Man, it is absolutely crazy right now in these markets, and it's trapping a lot of people. This incites a lot of emotions, and most people get their direction and confirmation from big moves. And so they're seeing this large move and they're like, it's bullish. Now's the time to get in. And this is about the time where it's setting everybody up. So you have to understand that big money is the one constantly selling to retail traders, which is the dumb money. And this is definitely that scenario right now. They are selling through here. It doesn't mean it's not going to go higher. It just means this is not a buying area. This was everyone's target. So the expected move of this inverted head and shoulder down here, all you do is you just take from the head all the way to the neckline. You take that space and you drag it on up to the neckline there, and it gives you the expected move. And so that's exactly where it's been at this entire time. I've had it on my chart for since August, really. And we hit that. We closed out. Great target, great win. Awesome. Well, there are so many long-term trend lines coming up through here that we are smacking into. We're gapping up again, which normally leads to the reversal coming through after a strong move. We're going to find that out in the first 30 minutes or so of today's market. If these bulls pop and then give it up pretty quickly, there could be some selling coming in. I believe that selling is going to be happening. Whether we're in a bullish scenario or a bearish scenario, I believe a pullback is needed. So where do we start with? Let's go over the bull scenario first. So this bull scenario has everything to do with the buying area at 585 to 575, the gap fill around the election. That is going to be a huge buying level. There is going to be a lot of bull demand, including myself, looking to buy this thing up whenever we pull back into this box. This is a fantastic buying area. And if you understand price action, you'd understand, yes, this is the buying spot, not up here. Be okay with it going to the moon without you. I exited on Friday. It's gapping up right now. I am missing out on money. It's like, no, I followed my game plan. This was my target. And I don't get rich from getting out at the top. I get rich from catching a move from here up to here. I did not get in at the bottom, and I'm not going to get out at the top. And that's okay. I never have. I never will. And I make a lot of money. All of that same thinking. Stop trying to be perfect in your trading. Stop trying to win and just trade. Follow your target. It makes sense. Exit. If it goes higher, I'm happy with returns that I got. It's okay to go higher. I know very soon we will be getting a pullback. And the last thing I want to do is be buying up here, because if I'm buying up here, I'm going to get caught with a pullback. And again, we went over this in that last week's video a little bit about risk. If I buy up here, right, technically your stop should be down here. This is where you're wrong. Down below 575 is where you'd be wrong on this. So that's where your stop needs to be, which means your 1-to-1 risk is at 633. That's for you to get a 1-to-1 reward. Well, everyone's like, well, Tony, that's fine. I'll just move my stop to here. Okay, cool. All that's going to do is most likely stop you out, come into my buying zone, and then take off. How often does that happen, right? As soon as you get stopped out, it goes all the way to your target. That's because you're getting in at the wrong location and your stop is in the wrong spot. So instead, your stop needs to be here. How can we change this equation? We need to move our entry down into the right buying area. So by simply waiting for it to get into this gap fill area, we now have a 3-to-1 risk reward. We're going to make 3 times the amount that we are risking if this trade works. That's why I'm not getting in here. You have to understand your risk. You have to understand your risk management. You have to understand what is a good trade and a bad trade. A good trade is not one that wins. A good trade is the one that gives you a fantastic risk reward with high probabilities and an opportunity to lose small. Trading up here is going to be very, very hard to lose small, because any little pullback is going to stop you out, and any pullback is not meaning we're bearish. It's most likely going bullish. And so play the pullback. Don't get caught in this game. So the bear scenario would be if it pulls back into this buying area and starts to pop and then rotates over and takes out its buying area. If you get this type of price action over the next week or two, look out. Something is off, and we could be falling down pretty good. The first stop would be probably about 560 to 550 area. This bubble, this is a pretty nice support buying area, not to mention it's sitting around the weekly 20 EMA on a weekly chart here. So that would be a pretty good buying spot in my opinion. I don't think that's a high probability. I mean, last week's candle was so extremely strong that this week could continue on. I think we're going to be getting a pullback here pretty soon. But if this candle gets taken out and the 20 EMA is not bouncing, this was all just a trap. They're going to pull the rug out and we'll see some serious selling. I don't know how far down we'll go, but just keep an eye out for that scenario. At the moment, I am extremely bullish on this market still. I do believe we're getting close, but until the charts are telling me that, I'm going to stay long. So at the moment, long is strong. I'm just going to keep planning my buy the dip locations because that's what the charts are telling us. Last week's close is telling me we have higher to go, and it's also letting me know that bulls are starting to put in their limit orders down through here simply because of how we closed on a weekly chart. So as we get pullbacks, I would imagine it's going to get bought up. Play with the large money, start planning out your entries. I'm not just going to buy just because it gets here, but I will use the smaller time frames to give me a better idea of when the bulls are stepping in. And if the bulls step in this area, yeah, I'm ready to rock and roll. If you would like to learn more about how to read these charts, how to become a better trader, Real Life Trading is a trading education company. We're here to teach you how to trade. And for right now, a special offer for our 10-year anniversary of Real Life Trading is a $25 lifetime membership to our trading community. This gives you free live weekly coaching in our community. This also gives you free monthly courses to teach you how to trade. This also gives you access into our trading community in Slack so that you can participate, post charts, get answers to your questions, and allow you to trade alongside us to help you learn and make money as fast as possible. We are not here to simply just give you a fish. We're here to teach you how to fish. Stop following the gurus and let us teach you how to become the guru. That's our mission here at Real Life Trading, so come check us out. So again, for a limited time, $25 one time, lifetime access to our trading community. Link is down below in the description. Let's dive over to the Qs. So the Qs are about to hit the midline here on this up channel that we've had for pretty much the last 5 months. So I am very interested to see what happens when we get into here. I'm going to put an alert on my chart, clicking right here. And by the way, you can add an alert by just hovering your mouse over here and having that plus symbol right here. Click that plus symbol and it'll add that alert wherever you want, or you can just right click and hit add alert anywhere on that chart as well at the price. Whenever the Qs get up into this guy here, we're at a new all-time high. It's extended. Again, I would expect these bulls to start to hold about 505 to 500. High chance that they do that. If they don't, and for whatever reason this all starts to fall back down, a lot more selling coming in. We're kind of at that stage right now where the bulls have to remain strong because of how extended on the markets we are. So bulls should hold in here. I expect they will. Follow the charts until proven otherwise. I would much rather go long here and then get stopped out, flip and go bearish, than I would missing out on this long opportunity, hoping that it goes bearish, because that's a low probability. There's a really good chance the markets have more in the tank. Just a matter of how much more. That'll get answered with time. But there is a reason for these bulls to take profits on the Qs here very soon and for some reversals to start to head back in. Now on IWM. IWM is absolutely cranking on this election news. All these rate cuts coming through. It is absolutely loving it. So the next stop for IWM is 244.50. That is your big time weekly resistance, new all-time high. We're gonna have to see what it wants to do and how it plays at this. I want to see strong closures as we get up into 244. If this comes up and then starts to reverse and puts in a large upper wick over here, that is not a good sign because of how extended it is. The more extended a market gets, the stronger the bulls have to continue to close. Closures are everything, and I'm looking at a daily chart right now, so I really don't want to see a candle that looks like this. That's not going to be the most confident, inspiring chart, especially with all of these gaps, because if we start putting in a weak candle up here and then it gives us a gap down on Tuesday, that is a very bearish candle pattern right there that could lead to a lot of selling coming through. So at the moment, bulls are in control and bulls just need to continue to close strong. If we can get that strong closure, it should continue to ride higher. One thing to kind of help get you an idea of how high is this thing going to go is to look at the expected move of this pennant pattern down here that we broke out of. So when we broke out of this pennant pattern right there, the expected move brings us to 247.60. So that is a really good spot for us to keep an eye out for reversals to come back through. A lot of these bulls at the moment are watching this area. So I am going to put an alert there and see if they start taking their profits as soon as we make that new high and start forming that candle that we were told to look out for, because hey, target is just above that new high. It makes a lot of sense for people to start selling. Because again, up through here, everyone's going to be buying. Everyone that doesn't know what they're doing, they're like, this thing is just going to go to the moon. It's going to go to 300 tomorrow. And everyone else that bought down here, they're exiting. They're taking their profits. They're going on their holiday vacation, right? That's the game. You've got to flip your mind a little bit and understand how to read these markets so that you're not getting caught and being the one being sold to, right? It's almost like the hot potato game, and it's like, just whatever it is at the end of this, do not hold that potato. And that's exactly what's happening to people that are buying up here. They could get rewarded, but again, the risk reward is huge. It's very, very hard for this stock to continue to make those moves to make your risk worth it. And odds are, if you understand where the big money's doing, they're taking their profits, this thing's going to fall. So learn how to trade, gain the skill of trading, and things become so much easier. You will understand when to buy, and you'll have a much better understanding of when to get out. And that is half the battle, my friends. Hope you enjoyed this little session, and I hope it gives you a little bit more of a game plan of what to look out for. So the key is, put alerts on your charts in the areas that we talked about, put notes on those charts, and then be patient to trade those areas. Don't trade the fluff in between. Trading is hard enough. It's much easier to trade at areas of taking profit and at buying areas. And I pointed all of those areas out to you on each one of the markets that I look at. So all you have to do now is just put the alert in place, have your notes, get your setups, and then when those setups occur in those areas, that's when you trade with the highest probability of making money. Have a great week, my friends. I am rooting for you. There's no one here in this world that wants to see you succeed at trading more than I do. I'll do everything I can to help you get those results. Feel free to reach out to us here at Real Life Trading and let us know how we can help you. We have tons of free education, free courses, free materials, and a $25 lifetime membership that gives you live coaching every week. Take advantage of that. Understand that trading is a skill. It's not simply just intelligence and outsmarting the markets and I can get this. It's a skill. And once you learn that skill of trading, now you'll be able to sit back, press a button, and start printing money and changing your life. Let us help you acquire that skill. Love you guys. Have a great trading week. Wishing you success, and I'll see you next week.